we're going to cover what's on everybody's mind, which is where is the inventory? Also, last week's data was a little odd. So did this week's data make more sense? That's what we're covering in this week's report. First off, thank you for taking a few minutes to join us for our weekly look at real-time market insights into our local housing market. My name is Scott Parker. I'm the Vice President of Sales and Marketing here at John Green Realtor, and I'll be presenting this week's findings. So let's jump in first with new listings for the 4 counties we track. And as you can see, we saw a bit of an uptick, which smoothed out that downtick we saw last week a bit. Listings should gradually climb from here, and they kind of hit their peak in May, June. But based on the trends, there's really nothing that indicates we're going to dig ourselves out of a low inventory environment anytime soon. We'll get into why we think that is here in a few slides. Here's under contract activity. So the market is moving in real time based on inventory levels. So you can see here, last week's dip correlated with lower inventory, and this week it trended back up because of that uptick in new listings. So the market is really going as new listing inventory goes. So new listings come to the market. Contracts tend to follow quickly after. Here's showing activity. So we love this graph because it's a good forward-looking indicator of demand, because those are active buyers that are out there looking to put homes under contract. And you can see the traffic trends have leveled off here a bit these past few weeks, and that's kind of after mirroring last year's pattern for the first couple of months. So traffic tends to peak over the next few weeks and then starts to slowly decline, as you can see on the graph from the previous years, kind of throughout the remainder of the year. So it will be really interesting to see what happens in these next few weeks. That will kind of determine where we're going to be at from a demand side of the equation for the rest of the year. Here's off market activity. So these are those active listings that came off the market without a successful sale. We had been trending more like 2021, but this number is back to historically low levels these past couple of weeks. So really the story here is homes that make it to the market, they're selling right away. And so that's what that data piece is telling us there. So under contract versus new listings, this and the next graph give us a feel for balance in the market. 60% on this graph is kind of a normal balance. 100% is way out of balance. And we continue to hover kind of right below 21 and 22 levels, but still way out of balance compared to more normal market conditions that we saw for the decade leading up kind of pre-COVID. Here we add in off-market activity so we can get a full picture of the inventory situation. And we see the same type of pattern of what we saw in 2022, where the market just can't get back to equilibrium, even at a point in the calendar where new listings are really starting to peak. So let's talk about the inventory situation. I had a few people reach out and ask me to explain why there's no inventory again. I've covered this in the past few years, but it may be a good reminder for all of the buyers that are out there and baffled by the current market. So let's jump into it. Really, what we see is there's 3 drivers. There's the psychological, there's the sociological, and then there's the physical. And the psychological impact can be understood by putting yourself in seller shoes. Number one, if a seller is probably thinking, if I were to list my home, what am I going to buy? So it's kind of this vicious cycle, if you will, of a lack of inventory creating more of a lack of inventory. And then we have interest rates. So the majority of homeowners have a mortgage at historically low rates, and watch rates double from that in a 6-month time frame late last year. So experts are calling this effect the great lock-in, because sellers are now, they have one more strong disincentive to sell when faced with the idea of trading in a historically low interest rate for a higher one. Number 2 there is demographics. So simply put, the 2 biggest population cohorts are the baby boomers and the millennials. One is aging in their homes longer and is faced with a housing stock that doesn't really meet their next need. And those homes they happen to be the ones that the large group of millennials who waited until later than the previous generations to purchase homes and kind of are all in those prime buying years, they're looking for those exact same product that the boomers are nesting in. So then you throw in the physical impact of a lack of new construction. And just a reminder, we went from nearly 50,000 new single family permits a year here in the Chicagoland market down to a paltry maybe 5K for about a decade, with so many builders getting wiped out by the Great Recession. So builders have started to work. They're working really hard on adding more inventory to the market, and that started in late 2020. But the zoning, permit, and land development process has a long cycle time, and this time around, builders are definitely erring on the side of caution as they ramp up. So all that to say, we are watching more and more new construction inventory hit the market, but it's not even close to being enough to meet the overall demand. So we're not in the prediction business on this report, but it is very easy to come up with a forecast and forecast a scenario where we don't really see supply catching up with demand for quite some time. So to recap, inventory remains low, and we don't see that changing much without some major economical event. And after an unusual week, this week's numbers behaved a lot more predictably and in line with seasonal patterns. So thank you for taking the time to join us for this week's report, and we'll see you again next week.